If you live in a high tax state like California, New York, New Jersey, or Illinois, this might be the biggest tax break in OBA for you. The SALT deduction cap is jumping from $10,000 to $40,000 for 2025, but there's a catch, okay? Now this is day 26 of me breaking down the One Big Beautiful Bill Act for the next 30 days, so let's get into it. So here's a big change. SALT stands for state and local taxes. That's your state income taxes, local income taxes, and property taxes combined. So before OBA, the 2017 Tax Cuts and Jobs Act capped the SALT deduction at $10,000 per year. $5,000 if you're married, filing separately though, okay? Now, this hit high tax states really, really hard. Now, after OBA for 2025 only, under Section 164B6, the SALT deduction cap increases to $40,000 for 2025. But here's the catch I was talking about. It phases out for high income earners. So if your modified adjusted gross income exceeds $500,000, the deduction phases out, but not below $10,000. So here's what you need to know. First things first is this is a 1-year provision for 2025 only. It's not permanent, right? The cap goes back to $10,000 in 2026 unless Congress, acts again. Now, number two is let's see who this benefits. Let's say, for example, we have a California couple and their income is $350,000. The state income tax paid would be about $28,000. Property tax paid, about $15,000. So total SALT, $43,000. Under the old $10,000 cap, they would deduct $10,000. Under the new $40,000 cap, they were able to deduct $40,000, which is an extra deduction of $30,000. If you're in the 32% tax bracket, that would save you $9,600 in federal taxes for 2025. Now, number three is the phase out kind of works like this. So for every dollar over $500,000 of income, your SALT deduction starts to decrease, but it never goes below $10,000. So high income earners still get at least, the old $10,000 cap, but don't get the full, $40,000 benefit. And number four is who benefits the most. And first thing is, high tax state residents, California, New York, New Jersey, Connecticut, Illinois, Massachusetts, places like them. And then high income professionals who itemize, right? People with expensive homes, high property taxes, or 2-income households in, high cost areas. And number five is you must itemize to benefit. If your total itemized deductions, SALT, mortgage interest, charity, medical expenses, if they don't exceed the standard deduction, $31,000, $500 for married couples in 2025, this doesn't help you. Now, number six is this is one of the most politically contentious provisions in OBA because blue states love it because it helps their residents, and then red states oppose it because it benefits wealthy and high, tax states. Now, number seven is for pass-through business owners. Some states have PTET, right? PTET elections, so pass-through entity tax elections that actually let business owners pay state taxes at the entity level.